All right, you guys. So if you're learning how to trade and are interested in how to trade during the upcoming recession, you hear me refer to we need a catalyst. So we have to understand what the chart means. That's what everybody else does. All the other crypto technical analysis, you can go look that up anywhere. But what I'm doing is I trade based on catalyst. What is moving the SPY? And the SPY ultimately moves Bitcoin. And so there's two kinds of catalysts that we have right now. One is data driven. That's like the Fed. So the Fed comes out today, for example, non-farm payrolls. There's more jobs. We haven't seen the jobs number grow slow. The market reacts poorly to that, right? Because the market wants to see, it's different than common sense, right? Maybe another video another time, but it's the opposite of what you would think sometimes. So the market's looking for jobs numbers to decline, and then it would rally off of that because the market runs off of cheap money. That's just the core concept. It needs those rates to come down. So today, the data came out, and the non-farm payrolls, there was not the kind of decrease in jobs that would signal a recession. So the market does not like that. That's a data-driven move. That's what we had today. And I chose to do this little video today because this happens all the time, but it's just a really good way to explain it. So you have data driven, which is when the Fed's talking, or in a week from now, you're going to have the rate hike. And so how the market reacts running up into that and afterwards, the continuation, that's data driven. Then you have news driven. These are things outside of the control of the Fed, and these are news catalysts. And so an example of that is what happened today. And if you look up here, China locked down today 21 million people, I think it was. So that happens this morning. And so what does that mean for oil? I didn't know this until I got home. I was out fishing, got home, and I'm like, oh, that explains what happened here with oil, right? Because when China slows down, if they lock all those people down, that's people not driving, that's people not making microchips. It's a slow to the world economy. There's going to be a decrease in demand for oil, right? Decrease in demand, so the price came down. So those are the two kind of catalysts that we can see that are going to, in the upcoming year, these are the things that you're going to need to be aware of, the important news catalysts. And right now you have China, and anything with China and bank defaults, that's important to pay attention to, or China and lockdowns, because that affects oil. You have the what's happening in Europe with the energy crisis and something called the Nord Stream pipeline. And so you could look into that and say, hey, if they shut down the Nord Stream pipeline, what happens to European energy, right? Those are news catalysts. Or, it's popular in America, the Ukraine politicized war, these kinds of things. But that catalyst was in March, right? And that's when wheat went crazy. And so that's what to look for. A news catalyst versus data-driven catalyst. Okay, so trying to keep it short, always trying to keep it under 5 minutes now. So I want to show you something. So knowing that, we saw the pullback in oil, we know shit's happening in China, okay, but it's been happening for a long time. People get numb to it, right? So over here on the SPY, okay, in week after next, you have the actual rate hike, okay? And so what I want to point out is that moving into tomorrow, if this pushes up, you could get up to 404. So here's a target, right? Just put an alert at 404. All right, so if the market tomorrow comes in and moves up to 404, what could happen over the next week is kind of a sideways move. Why? Because everybody's going to wait for the next week for the data catalyst to come out, for the Fed to come out and actually do the rate hike and or not, or whatever report's going to come with it. So you're going to see sideways. So you could see a move up, and then you could see sideways for a week. And these weeks are really good for you to learn and to set up your plays for whatever is going to come next. And so you follow along and you go, okay, where's the data coming in? Is that going to drive the market upwards? Is the Fed talking about a half-point hike, or are they talking about a three-quarter-point hike? Are they slowing down the taper? These kinds of things, and that's going to tell you which direction this is going to move. So those are the two kinds of catalysts. In the meantime, if you were to think about escalation, what could happen with the news, you would watch something like these China lockdowns. Okay, and if you were a real trader, if you're not just a crypto trader, like I traded options, so I traded. It doesn't matter in that world. You don't really care. So today, for example, China lockdown, you can short AMD. They make microchips, right? All the chip companies across the board would have gotten totally clobbered today because of that news. So that's a news catalyst, and it happens very quickly, and it can also not have a large continuation, right? It's not going to cause a catastrophic fail. So that's what we're looking for, is the difference in the upcoming week. You have this, what will be a consolidation. Don't expect a lot of volatility. If it's a 10-day forecast, I would expect, thunderstorms tomorrow because the week is closing. But then leading into the Fed, we also have a holiday on Monday, and then leading into the Fed next week, people are going to get, they're not going to want to put their cards on the table that early. They're going to want to collect as much information as they have, and then running into the Fed meeting, you're going to see some volatility come in towards the upside and or towards the downside, and then I will, I'll be in it. I'll be saying, calling the plays there. But I just wanted to make that clear. So it's like data driven versus news. All right, cool.